Welcome to Chapter 8. And in this chapter, we're going to talk about the payroll setup. Now, QuickBooks has a payroll subscription. And if you're going to run payroll through QuickBooks, I won't say that you absolutely have to have a subscription, but not having one will make it very, very difficult. And the reason for that is that you will then have to do all the calculations manually, and it's not that you can't do it, but the odds of making a mistake are really quite substantial. The other thing that QuickBooks will do for you is it will prepare all of your tax forms and remind you when they're due, in terms of payroll, I should say. And really all you need to do is, click on some things, review them for accuracy, sign and file them. And so while this can be a little bit pricey, it is certainly better than doing them manually. So as I said, QuickBooks will allow you to process and track your payroll for your company. It will compute the withholding. It will compute proper retirement if that's something that you do. And it will make sure that you have all the most updated tax tables, assuming that you subscribe to their payroll subscription service. And so the fact that there is a subscription service available doesn't mean that you don't have to do anything. There's some setup things that you need to do on the user end side of the things to make sure that you are properly set up. And despite the fact that you can pay a fair amount of money for a subscription service, the subscription doesn't know everything about your company. So there will be some things that you will need to tell it. And I'm not going to bother to make a comparison between a manual system and QuickBooks for payroll. So payroll was one of the first things that you could do on a computer. And I actually remember back in probably the mid-90s when we purchased I believe it was a Commodore 64 computer. And probably most of you won't remember what that is, but Google it for fun. And the first professional related task that I did on a PC at that point was payroll. And it was for a very small construction company who had been doing things manually, and having payroll processed professionally, even if you do it in-house, really creates a level of professionalism for your company that can't be matched by writing out checks in blue ink. So, and as I said, without the use of computers, everything had to be done by hand. And it's fine if you've got people who are on salary and the same withholdings get made all the time. You can pretty well copy from week to week. You still have to pay attention to your year-to-date stuff because you've got year-to-date returns that need to get filed. You've got W-2s, or it's not year-to-date, but annual returns that need to get filed. You've got W-2s, you've got quarterlies. So you still need to pay attention to cumulative totals as you go. Not to mention the fact that if you have a situation where maybe you've got an employee that's having child support withheld, that adds a whole other layer of complication to the process. And so it's something that if I had really any more than one employee, I would not want to bother doing. And frankly, even if as my only employee, I pay for the QuickBooks subscription for myself because it's just easier to not have to, I don't have time to calculate all the things that it requires of you, and it's just easier to allow QuickBooks to do it for me. And then I can get reports, I can get all kinds of things that I need to have. And so, in addition to just understanding the calculations, it's important to know what the relevant laws are, who's entitled to overtime, QuickBooks isn't necessarily going to know who's eligible to be paid at time and a half and who is exempt from overtime. So those will be things that you will have to know to tell QuickBooks. You will need information about each of your employees. You'll obviously need name, address, social security number, and basically you'll need to have them fill out a W-4 form so that you know what kind of withholding that you're looking at. Are there voluntary deductions? Are there involuntary deductions like child support? Is there a wage garnishment that's in place? Those are all things that you're going to need to do when you set up the employee within the system. If you are starting your payroll in the middle of the calendar year, you're then also going to need to input the year-to-date information. What have these people been paid up to this point? Because you'll have to load that in terms of starting balances. So just a little bit of terminology here. We've got gross pay, and that's the total earnings for the person for a specific period. It can be salary, it can be hourly, it can also include tips and commissions. And gross pay is the starting point for when we have taxes that we're calculating. Now, you can also, just to complicate this a little more, you can have your what's called your true gross or your federal gross, because there are items that are not subject to federal income tax that then other taxes get calculated on after that. Things like health insurance, which QuickBooks fortunately knows and will pay attention to, not subject to income tax. And I won't bother to go through the quick check. And then we come to FICA. And FICA used to be a line item on a pay stub way back in, I don't even remember how long ago. And at some point, the determination was made to create two separate line items, which really comprised FICA to begin with, which was Social Security and Medicare tax. And so now those items are listed separately on a pay stub. And FICA, Social Security tax, is 6.2%. And for the tax year 2017, it was on the first $127,200. I'm not sure what it is currently, but a simple Google search will tell you that. Medicare is paid on all earnings, so there is no cap on Medicare. And it's at a rate of 1.45%. And so, whoops, again, there's no maximum on wages. And then there is also, for very high earners, an additional 0.9% Medicare tax. And so this is where you've got really high earners. So again, we're talking about, over 250,000. So when it comes to Social Security and Medicare tax, there are two parts to this. There is an employer side and an employee side. And so each will pay half, not half of 6.2%. That is the half. So the total Social Security tax that gets remitted is 12.4% of the employee's earnings. However, half of that is withheld from the employee's paycheck. The other half is contributed from the employer's own money. So yes, it does cost you to have employees. The same thing applies to the Medicare. So the total tax really is 2.9%, but half of that is withheld from the employee, and the other half is contributed by the employer. Federal income tax is something that is strictly withheld from an employee's paycheck. And how much an employee has withheld from their paycheck will depend on their filing status, whether they're married, single, had a household, and how many allowances that they claim on their W-4 form. And again, if you have the subscription, you don't need to go calculate these things manually. QuickBooks will do that for you. If you don't have a subscription, you're going to be looking for IRS Circular E, and that contains all the payroll tax tables that you will need in order to calculate federal income tax. And well, not in New Hampshire, but certainly in Vermont and most other states, you have state income tax. And you could you could be a New Hampshire employer, but have employees who live in Vermont, and you may have to withhold Vermont tax on your Vermont employees. So that's something that you should be aware of if that applies in your particular situation. There is federal unemployment, and that is 0.6% of the first 7,000 of each employee's wages. Then you have state unemployment, and the rates for that will vary, and I won't, you will get a notice, and in fact, this is what a notice looks like that is produced annually by the Vermont Department of Labor, for example, and this tells each employer what their percentage of state unemployment for that particular year is. And it's going to be based on what's called an experience rating. And what an experience rating does is it establishes how many employees have filed unemployment claims on that particular employer's account. And the more claims you have had, the higher the percentage of unemployment. So QuickBooks isn't going to know what your company's unemployment insurance with rate is. So that's something that you're going to, and I say unemployment insurance, that's technically what it's called, but it's a tax. So that's something that you're going to need to be aware of. And it will change in Vermont. I get the notice. Let's see. This comes out sometime, I think, in June, and it is effective July 1. So even though our payroll operates on a calendar cycle, this particular contribution rate may change in the middle of my tax year. And so I might have to go in and manually make that adjustment beginning with my July 1 payroll if my percentage has changed. Some states also have disability insurance, and California, in fact, is one of those states. So it's a short-term disability. I don't know, it covers 6 or 8 weeks of disability, or maybe even longer than that. But it's something that is withheld from an employee's paycheck. There may be other deductions that you have to make that I had alluded to earlier: 401k, insurance, pension, if there are other, long-term disability, life insurance, and some of those things may be partially funded by the employee's check. It may be all employer contribution. It may be all employee contribution. So QuickBooks isn't going to know that, and you're going to have to tell it. Once we have taken out all of the appropriate deductions, we are left with an amount of money left over that goes to the employee, either directly in their check or as a direct deposit. And that is what's known as your net pay. We then also have tax that we then have to remit because we withheld it. So we've got FICA tax, Medicare tax, again, the federal income tax, federal unemployment, and then on the state level, there were also the state-related taxes. So in order to set up payroll in QuickBooks, you have to first activate. You have to make the payroll feature active. Otherwise, you will not see it. So there's actually 2 ways that you want to activate. There's potentially 2 ways to do it. You only need to do one. If you are going to not do your payroll manually, then what I'm about to talk about is all you need to be worried about. Then I'll show you briefly where you can find the information on how to activate it if you're going to be setting it up manually. Although I don't want to contribute to your delinquency, so I'm not going to go through the steps of how to set it up manually, but you can read that. So I will, once we activate the payroll option, QuickBooks will create 2 new ledger accounts for you: payroll liabilities and payroll expenses. And hopefully you remember what those are for accounting 1. And then I'm going to very sort of slowly, and you may want to just pause and read these next couple slides if you think you want to do the manual payroll through QuickBooks, and then I'll jump over and go through this activation process on the live version. So I'm going to stop here, go over to the live version. Oops, I keep doing that. Activate the payroll, and then I will jump on to the next video for the next phase of this. So we're here at the live version. I'm going to go to Edit, Preferences, and Payroll and Employees, and then over to the Company Preferences, and then we're going to click Full Payroll. There is also an option. QuickBooks offers online payroll processing, but this is what we're worried about here. And then we're just going to stick with the default information at this point and click OK. And so that concludes this video. I'll jump on to the next video for the next part of this chapter.